It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, the mayor, the governor of the great state of Texas, Mr. Michael Becker. Michael, how are you?
Things are going okay today, Paul. How are you?
I hear some of the kids in the background. So you're not at the office these days?
Still stuck in the house as we record this. So it's April 19th as we record this one. So ready to get out of these four walls.
What week are we on in this craziness?
I think the first or second day of week 6 for me. So it's can't believe part of this has been going pretty quick. My wife and I were talking last night. It doesn't seem like it's been 5 full weeks, but it has. And then part of it seems like it's been forever.
It's definitely Groundhog Day over and over and over again. So thanks for hanging out with us. As you know, Michael Becker, he is a principal with SBI. We call Michael because he is an operator of thousands of apartment buildings. And prior to that, he was a former banker for one of the largest commercial real estate banks in the United States. And so he has a good perspective to kind of help you, kind of give you kind of an understanding a little bit about what's going on. So we certainly do appreciate you spending some time with us, Michael. So we had a podcast, a conference call last week. I think we had 1,400 people that had signed up for it. It was co-sponsored with Marcus Millichap out of their Dallas office with Nick Flewellen. We had two economists that came, or one economist and a national director, John Chang, who, if you don't know John, you've probably read one of his reports that came out of Marcus Millichap. He's an economist that kind of goes through all the numbers and tries to make sense out of them. And especially on the apartment side, he deals with 10 other food groups, meaning he does retail, office, warehouse, everything you can think of, but he also does multifamily. So we had a great discussion with him. And a gentleman named John Seabury, who's kind of the national multifamily production coordinator. So he gave us some insight about what was going on throughout the country. So if you have a chance, listen to that podcast because we re-recorded it and it gave you some good insights. It's just about 60 minutes long. We tried to keep it as short as possible. And we packed it with a bunch of information. On that conference call that we had with Nick Flewellen out of the Marcus Millichap office in Dallas, we had 1,000+ people listen to the conference call, but they also had a chance to ask questions. But unfortunately, we just ran out of time to answer all the questions. And so what I'm doing here over a period of maybe 2 or 3 Ask Mike Mondays, I thought we would answer some of these questions that some of the people that were in that conference call wanted to get answers on. And so I've kind of directed them right to Michael. And so, Michael, are you up for getting a couple of questions answered?
Yeah, let's do that.
So, and I'm probably going to ask really 2 questions, and we'll try to go through it because we had so many questions that came through on every episode. So, Michael, for deals that are closing at this time, are you seeing discounts on pricing pre and post lockdown for deals that were in flight pre the lockout? Any guidance on the percentage discount range that you're seeing in the DFW area? So that's going to be question number 1, and I'll go to question number 2 after we kind of answer question number 1.
Yeah, I think for sure it kind of really depends on kind of when the transaction was kind of put together and then how long it was in escrow and then kind of when it was scheduled to close. So I think deals that were kind of set in January, early February that had some hard money, that didn't have the contingencies, the loan was generally kind of set before the lending guidelines changed. I think most of those pretty much closed as were contemplated with the contract. I do think several of those maybe then had to go back and kind of get retraded to, kind of resize the economic terms. I think the deals that were kind of set, but maybe not in actual PSA, I think those largely got retraded and or fell apart. So either the buyers just straight up backed out and or they got some sort of price adjustment. I don't know if I don't have the best view of it because I'm just kind of my own little world, but some of the conversations I've had with the brokers, it seems like, you're getting anywhere from 3 to 10% kind of depending on the deal and price adjustments. Kind of what I kind of anecdotally heard just from talking with everyone in the marketplace. So I do think it kind of depended where you were in the transaction and what economic damage you might have had. I mean, I think these deals that got subject to 12 months of Yeah, TI either the deal fell apart and or they had to get some sort of price adjustment due to the economics being different for the buyer pool. Firsthand knowledge, we had we had 3 deals we're in the process of selling. We had 2 that were one that got in escrow in February, and we were kind of right towards the finish line as everything started shutting down. And a couple of days before we were set to close, the lender for the buyer froze up, and the deal ultimately ended up falling apart. We missed it by a couple of days with their lender, which was unfortunate. Then we had another deal that we just got into escrow about a week before everything started shutting down. It's kind of got in escrow that first week of March, I believe it was. And then that buyer ended up walking away as well. It was a smaller deal. So that buyer hadn't really gone too far down the process. So they were nervous about getting their capital put together. And then finally we had a deal that was on the market, set to call for offers kind of late March. And then, basically we had a whole bunch of activity and tours. And then, really we had 2 people kind of show up that were well below kind of the pricing range that we expected to get. And so we, don't have any sort of distress. We didn't have sort of loan maturity. So we're just kind of basically pulling back because there's no point for us taking a big economic hit for what we feels, be relatively temporary disruption in pricing in the marketplace, whether that be 6 months or 12 months or 2 years. I'm not quite sure, but we don't have the gun against our head. So we don't need to make a decision. So we're going to pull back. So I think that's probably largely what you're going to see for most people that are not in distress. If you don't need to sell right now, why would you sell into weakness? So I think most people in a similar position will probably do the same, Paul.
But if you got into a contract before this whole thing, a contract is a contract. It's a legal transaction. So number one transaction, their lender fell apart, but that didn't mean that there wasn't other lenders that are out there, because we closed transactions that the lender has still been part of it. So maybe one lender fell apart, but you can kind of pivot to lender 2, 3, 4, or 5. And so how come that lender didn't do that?
Yeah, I mean, they just kind of fell apart, and I think it just kind of really depends on everyone's business model, whether they can make this viable or not, and how fragile your equity is. Yep. So if your equity is kind of put together with bubble gum and Scotch tape, I think it's easier to break apart when you start getting from the 83% bridge loan, and you got to go to 75 with a bunch of additional escrows, and just kind of increases you out of pocket to close, and then starts, the projected returns get kind of all out of whack. And then I think that's when those deals kind of fall apart a little bit more. That's kind of what I think. But yeah, you're right. There's still lenders out there lending, deals still get done.
And in that case, they could have been an assumption on their deal. So, check out and find out, because if you are in the middle of a transaction and that loan does fall apart, just rebalance and see if that loan is assumable, and try to do an assumption, because assumptions are fairly easier than doing brand new debt against the property. So that would be something I would take a look at. Now, here's kind of the second or follow-up question on that. Where do you see cap rates in the future? And I'm going to break that down to immediate and long-term.
Yeah, I think immediate, I don't know if it really matters too much. I don't think there's a whole lot of trades we're going to see in the immediate term, call that next 90, 120 days. I just don't see a whole lot really transacting, to be honest with you. So there'll be a couple outliers here or there. Like I said, either something that was already previously set or was set that got modified, and I can't, or potentially like a 1031 type of trade. But I think it's going to take a little while for the distress to kind of hit. So I think maybe the intermediate term, maybe, call it 4 to 12 months from now, kind of that time range. I do think we're going to see some expansion in the cap rates. I mean, everything was priced to perfection. A lot of these guys are buying on pro forma, so I think what limited trades, I think on stabilized non-distressed deals that we'll see kind of in that 4 to 12 months from now, I think there'd be some level of uptick in cap rates on kind of the non-distressed stuff, that people that just have maybe owned it for a long time, have a loan maturity coming up, they just want to sell it ahead of that. I do think you'll probably see, maybe 50 bips, Paul, maybe 75 bips kind of on the non-distressed stuff expand in kind of the intermediate term. I think if you have some distressed sales, a level of distressed sales, I don't know if you necessarily see cap rates expand, because it's not going to really be a cap rate type of sale if it's distressed. It's more like a per pound
Boy, that's some great information. What we don't do enough on is ask people to give us a 5-star rating on the Old Capital podcast on iTunes. So if you find value in some of the stuff that we talk about or bring to you to kind of walk and hold your hand through this time, can you go back on whenever you have a second, if you're a listener to the podcast, and give us a 5-star rating? That would certainly help us out. We've been doing this for a number of years, and hopefully you've gotten some just general basic knowledge about what's going on in the multifamily. We certainly would appreciate that. And then, Michael, tell me a little bit more about SPI and what you guys do, and maybe that'll give some people more of an understanding.
Yeah, I mean, if people want to find out more information about what we do, just simply go to our company's website, which is www.spiadvisor.com. That's SPI like spy, advisor.com. There's a contact us form, fill that out, and we're always happy to try to set up a call with listeners off the podcast. But, really, Paul, we do two things. We will either go out, identify high quality deals, put them together, and go out and raise capital from like a syndicated format. So we're always looking for people that potentially want to invest with us. Whenever these deals start trading again, hopefully we'll be in a position to take advantage of that. And or if you have $5+ million kind of in capital and you're looking to kind of do your own deal, we'll do advisory services where we kind of help your money come into the marketplace and put the deal together, help you identify it, underwrite it, place a debt, and kind of get you set up with kind of a business model, a team of people. So especially if you're kind of out of the area, you don't know people in Texas, you want to kind of make it to Texas. We've been successful doing that for several clients over the previous years. So I think that's something that might be a pretty good time to try to come to the marketplace here, and kind of maybe the third quarter, fourth quarter, when I think things start loosening up a little bit.
I think that having the ability to talk with Michael, if you are thinking again of investing, is important, because during this time of, say, crisis, Michael has been communicating unbelievable amounts of information coming to the investors, and I think that is a great attribute. Think about seeing the president of IBM or Intel or Cisco Systems on CNBC every day explaining to shareholders about what's going on. And that's kind of what Michael's been doing, is he's pushing out emails. And I think that if you're an investor, that's what you need or demand from your general partners, your managing members. You need to see that level of information. I'm not going to say every day, but maybe once or twice a week about what's going on, just kind of go through collections and occupancy and delinquency and just accounts payable, so people can get kind of a just big bear hug, as I say, about what's going on with their money. I think there was something that came out after you were on that conference call with Nick Fluellen and Marcus Millichap. One of your investors pushed over to you, and you pushed over to me, which was I think was great. He says, Michael, great call. You're an exceptional steward of others' wealth. Thank you. So I thought that was a very nice compliment, unsolicited, by an investor that has listened to your communication going back and forth. So I thought that was awful damn nice. And so, today's not the right time to, talk about buying new deals, but it will be at the right time in the future. So I guess get to know Michael and his group. And if you're looking for a loan on an apartment building or an office building or a warehouse, don't forget about Old Capital Lending. Go to oldcapitallending.com and take a look. You've heard the professor, James Zhang, create some of these outstanding videos about what's going on with the coronavirus and the effect that it's had on multifamily. Go onto our website, Old Capital Lending, and then for the podcast, Old Capital Podcast, we would love to have you check in. And again, don't forget about a 5-star review if you could, whenever you have a second. Again, Michael, thanks for being on. We appreciate that. I'm Paul Peebles. Have a great day.